Yo, what is up, guys? Today we got a brand new video on correlation pairs of the foreign exchange market. Okay, so we also got correlation on the foreign exchange and the crypto market, but we're gonna speak about both. We're gonna start with crypto first because that'll be quick and easier, and then we'll speak about the foreign exchange market. Okay, so let me just settle this real quick. My bad. So let's start with the Bitcoin USD first, and then we'll move to Euro USD and all that stuff. So let's get over to BTC. I'm actually doing a voiceover because my video did not record. So essentially, the Bitcoin USD chart moves off the DXY, as you guys knows, and the S&P 500. The Bitcoin chart is mostly correlated on the S&P 500, as you guys know. But since the market is closed, I can't show you. But if you look in real time, you'll see that most on the higher time frames. But sometimes the price of Bitcoin is manipulative, so you gotta be careful with that as well. Okay. So just if you want to look at Bitcoin higher time frame, you can look at the S&P 500 and the DXY as well. If the DXY is bearish on the higher time frame, then you'll see some nice bullish momentum on Bitcoin and S&P 500, which we've seen for the past 2 to 3 months ish. So that was a good run. As we've seen, DXY also cooled down a lot since it was at like 115 at one time, but it's like back at 101. So that's very nice. So now we're gonna speak about EU, right? So what does EU correlate on? First of all, we're gonna speak about different pairs. And what do we have? We have Euro USD, we have GBP USD, we have AUD USD, and then you have all other pairs, but I'm not interested in those because they don't have a lot of volume as all the other pairs do. But of course, you have NAS 100 and all that stuff, but that's not important. So what do we have? Euro USD, Euro AUD, and we have Euro GBP. And how are we going to be determining what we're going to be looking for? First of all, if I'm bullish for Euro USD, which I am at this point, I'm going to be looking for buys. And how do I identify the most profitable pair, right? I just look at Euro USD first. I set up my bias. Once my bias is done, I look at the other pairs that are having good volume and I'm able to trade, right? If I'm not able to trade them, then I'm not going to be looking at them. But if, let's say, for example, Euro GBP, which is a euro against the British pound, is bullish, then that's going to be meaning that the euro is stronger than the British pound. So essentially, I want to look at the most strong pair and the most weak pair, right? For buys and sells. And if I'm looking at the most strong pair, which is Euro USD at this point, not at this point, but I want to be looking at the strongest pair. So as you guys can see, the euro against the pound, AUD, Australian dollar, is actually pretty bullish, even on the 4-hour. So euro USD is bullish, euro AUD is bullish, meaning that the euro is stronger than the Australian dollar. So I eliminate Australian dollar when I'm looking for buys. Then I look at the euro pound, and I see that the euro is also stronger than the pound, meaning that both the euro is stronger than, first of all, the dollar, which is not important at this point. The euro is stronger than the Australian dollar and the British pound. So I know that I don't look for buys on those two because they are weaker than euro. So the most profitable long will come in euro, right? So what I do is I look only for buys on euro until price action changes in these pairs. So you always gotta have some markups on these pairs to be sure that that you are following the trend and following the weakest and the strongest pair. So essentially, what I just said is, Euro USD bullish, Euro AUD bullish, Euro GBP bullish. You're gonna be looking at the most profitable pair. So let's go back in time and I'll explain it real quickly. So essentially, we go back to end of March, kind of, and I get a little bit. So I speak about AUD GBP right here, which is gonna determine what pairs also bearish or bullish. Because let's say, for example, the GBP is stronger than the USD or the euro. So if the pound is stronger than the euro and the AUD is also stronger than euro, then I want to be looking at the Australian dollar against pound because I want to see which ones are stronger, right? So there are four pairs that you want to note, or five. The euro USD, which is your main pair. Then you have euro GBP, and then you have euro AUD, right? So that's three, and then you have AUD GBP. And then those are the four pairs you're going to be looking at because essentially they represent which pair is stronger than which pair, right? That's what you want to be knowing, or which pair is weaker than which pair. So at this point, we're looking at Euro GBP and Euro USD. We see that Euro is stronger, so we're only going to be looking for buys. right? And this will also tell you in the long term, the more profitable you will be, because you're getting the most stretched out long. Because if EU pips 20 pumps, pumps 20 pips, my bad, pumps 20 pips, then GBP might pump 18 pips or 17 pips or 16. So it's a little bit less profit, right? So I'll go into 3 screens at this point to show you guys the difference, because whenever I'm taking a sell, you'll see that actually the profit is more on the weakest pair than the stronger pair. So yeah, I gotta go to those 3 first of all, because it's more that's the easiest one. And don't mind this, I bought this account of someone else. It's kind of crazy what he's charting do, but I guess if it works for him, it works for him. He had like 1 million things, but yeah. So essentially we're gonna be waiting till I sort all this. I could also skip this, but yeah, let me skip this actually. Okay, so I got everything sorted. We are at February, right? So we're gonna be looking at the 4-hour time frame, and we're gonna see the most profitable slash least profitable pair. So we're first of all having 3 charts. We have Euro AUD, we have Euro GBP, and we have Euro USD, as you guys can see at the bottom of my chart. And what do you see at this point? The euro is, well, you're actually in a bullish trend, but you're slowly having some pace off. But the euro is actually stronger than AUD and GBP. So if you want to look for sells, you're not going to be looking sells for both euro and both, not just euro, right? So if you want to sell, you're going to compare to the AUD to the GBP, because you want to see which one is the most profitable one, right? So essentially what this means is that you always want to see which pair is the most strongest and the most weakest, because that's what you're going to be moving based off, right? So what do we look at? AUD GBP at this point, because we're not interested in sells on EU, because EU is stronger than all those pairs. So what do we see? We actually see that the AUD is stronger than the pound at this point, meaning that we're better off shorting pound, because the Australian dollar and the euro is both stronger than the pound, meaning the pound is weak. So we're going to be looking for sells on the pound, okay? And then if you were to look bias, you would not look bias for pound, you would not look bias for AUD, because EU is stronger than both of them. As you guys can see, EU is running against pound, and also EU is also running against AUD, as you guys can see in the third chart right there. So at this point, I think I was lagging or some shit, I don't know, but yeah, we're gonna be looking at GBP USD and then AED USD to show you guys what the price has been done and what the price was doing at that point and how many pips it dropped, because that will show you guys that we were correct and we were actually selling the least, the most profitable pair, which is GBP, because the GBP was the weakest. So that's a nice catch, and that also shows that what I just said all is correct and is not cap or lie, just makes sense, right? So we're gonna get the candle straight so we know exactly where we are. So essentially we want to have 10 candles to see what the following 10 candles has done for us, because that's gonna determine how many pips each pair dropped, and then we can compare which pair was the weakest and the strongest, right? Because we knew up front which was the weakest and which was the strongest, but we're just gonna show you for a confirmation. So we're now taking the same candles, we're gonna move 10 candles and see how many pips each one drop, right? So let's move it slower. 1 2 3 4 5 6 7 8 9 10. So that's 10 candles right here. So we're gonna be measuring the 10 pips, the 10 candles, my bad. So what do you see actually? We see that AUD USD dropped 180 pips, and then we'll see EU. Well, that went a little bit too fast. So 1 2 3 4 5 6 7 8 9 10. Actually 10 now, yeah. So we'll see how many pips that drop. So at 180, then we had 200 pips, and I think I actually went one candle past. I'm not quite sure, but it could be possible because the euro was actually stronger than both of them. But I guess I went one candle too much because probably the euro was dropping less pips. But if you look at GBP, it's going to be very different because GBP dropped 240 pips. So this just shows that we were correct. If we were selling GBP, we would be catching more pips and more risk to reward just by, following the pair that is the least strongest and selling that pair, right? And if it was the least strongest, the most strongest, you would be buying that pair. So that's the correlation that I'm speaking about. The most strong pair you're gonna be buying, and the most weak pair you're gonna be selling, because that's what's gonna give you the most profit, right? So I hope it makes sense. And this was the pair correlation. We're also going to be speaking about DXY, which is the dollar currency index, which is a basket of, I think, Euro, GBP, AUD. I'm not quite sure which pairs they are. I think I'll have a look. One sec, DXY basket. So I don't think I can find it, but it's actually very okay. I can see now. So it's Euro, GHF, the Swiss franc, so, and then we have the Sweden, Canadian, GBP, and JPY. So these are what isn't the DXY basket. So as you guys can see, the euro is actually the most. That's why it's also correlate the most. So what do? Euro USD bias, you're gonna watch your bias. If you're bullish, you're gonna compare AUD Euro to Euro GBP. Compare both of them. And if AUD is stronger than Euro, you're going to compare AUD to GBP. But you could also look at GBP Euro. If GBP Euro is stronger, so if GBP Euro is strong, meaning that's an uptrend, and AUD GBP is also an uptrend, then you know that AUD is the strongest one, right? So you're just going to be looking at the strongest one, and the strongest one is determined on, if it's in profit, if it's green, if it's going upwards, because that's what price does, going up and down. That is what you're going to be looking at. And yeah, that's going to be it for the correlation pair. I hope it made sense. And we're also going to be looking at the DXY. The DXY is just how can I say, it's just the shadow of EU. It's just the same but in reverse, right? So if EU goes up, DXY goes down, and it goes down 100% correlated, like 100%. You don't see EU do anything else than just be DXY's inverse, right? Just the inverse of DXY. And I'll show you exactly in the percentage wise as well on the 15-minute chart right here. As you guys can see, you actually see the same setup right here. Boom, 0.95 percent, boom, 0.95%. And why do you use the DXY if it's the same anyway, but just reverse? You use them because sometimes Euro USD can be choppy and DXY can be a little bit more informative. Then you can just look at, if your DXY could bounce from any potential demand or supply zones, and based on that you could look for potential reversals on EU. So that's a very good option you should take. Like whenever you're doing markups, you should not forget DXY, because the DXY just plays out the euro, but just the difference, right, and the reverse, right? So essentially that is the important one. And on the lower time frames, actually very good. If you're a scalper, then you can see that the DXY sometimes makes a move first and can pre-run Euro USD. So let's say you want to sell, but you're waiting for that candle closure below, and if the DXY already made the candle closure above, you could also already pre-run that sell or the buy, right? So that's also a very good thing about the DXY, I must say. If you're a scalper, if you're a long-term trader, it's also the same. The DXY is just a perfect tool to spice up Euro USD to get the most confirmation out of it. I use this on a day-to-day basis. It's very good. But yeah, DXY correlates USD. As I said, DXY is the USD dollar currency index, and it's gonna say DXY correlates Euro or just any USD pairs like gold, NAS 100, AUD USD, GBP USD. Any of those pairs are correlated to DXY. But sometimes it is that the correlation between the the Nasdaq and stuff can be lower because they just move a little bit different. Sometimes it happens. But the Euro USD 100% moves correlate to the dollar. The 100%, it's always the same. I don't think I've ever seen it do something opposite. Maybe one time, I don't know, I can't remember, but I don't think so. Like all you need in trading is, if you're a Euro USD trader, you only need Euro USD and DXY, and maybe those GBP Euro and AUD GBP and all that stuff, which I personally don't use, but you could use because I'm a continuation buyer. I don't tend to use them, but let's say if you're a higher time frame swing trader or whatever, then you may use them. But yeah, anyways, this was it for the video. I hope it was informative and easy to understand. If it was not, feel free to ask anything. But yeah, it's gonna be it for the video. Peace out and have a great one.